Wall Street is taking it all in its own stride, the uncertainty. The S&P, as I told you, look at the markets, they all closed up and they were all at records for tonight. It's the records, the Dow finished. It's a remarkable turnout from a couple of months ago when the major indices appeared to be headed towards a correction. The chip stocks have a lot to do with that. The Philadelphia Semiconductor Index has nearly tripled over the last year. It tracks companies that make and design computer chips. The FT's Robert Armstrong has noted that the broader markets become dependent on these companies. Robert Armstrong, is the US financial commentator for the Financial Times. He's with me now. Robert, we've been here before, in a sense, in different shapes, different guises, with different sectors. It is the chips, if you will, chips with everything, because I guess that whichever way this AI boom goes, however big it is, the chip makers stand to gain regardless.
I think that's right. And there are so many orders in the value chain now for building these data centers that not just chip companies, but a whole set of companies that help build, maintain, cool, wire, construct these data centers just have more orders than they know what to do with. And that is going to continue for months and years, regardless of how big this data center boom turns out to be, how big the AI technological revolution turns out to be, because the orders are sort of in already. You know, the construction has already begun. So it's a wild moment really for Wall Street.
If you're buying a chip fund, in a sense, you hedge your bets across all of them, the winners and the losers, and those that might not do that well. But if you are brave and decide to go individual, pick and choose, then you really are on your own, in a sense, for who's going to have the fastest super chip that is not going to be beaten by the next one when it comes out.
Absolutely right. And of course, some of the manufacturers of super chips are not chip companies at all. Companies like Google and Amazon and other members of the Magnificent Seven are working on chips of their own because they don't want to be dependent on the likes of NVIDIA in their own business. And they're spending untold hundreds of billions of dollars, and they'd rather spend that on their own stuff. I mean, one issue, Richard, is that we are all, in a certain sense, owners of chip funds now. The S&P 500 is coming to look increasingly like a chip fund itself.
Okay, but is it justified, bearing in mind the way we know economies are going and AI is going? Is this trend valid, in a sense, or should we be wary of it?
The earnings of the companies that are doing well right now are very good. In other words, Micron, the memory chip maker, has never made so much revenue as it is making right now. So the stock price movements are backed up by earnings at the companies. The question is, how long can this rapid growth last?
Right.
And, you know, the answer is definitely some months, a year, 2 years. But the prices now are forecasting 3 years, 4 years, 5 years of prosperity into the future. And there's no way for any of us to know how right or wrong that is. All you can say is the prices are forecasting a very bright future indeed.
And today's a good example of how we have two markets. We have the market on the left side of the wall, which is concerning itself with chips and AI and all of this. And we have the market on the right side of the wall, concerning itself with growth, Middle East, oil, slower growth, Straits of Hormuz. Yes. That right side of the equation is still not fully influencing the whole market. And the question I get asked repeatedly, and I don't really have a very good answer because I'm punting it to you, is why is the rest of the market not more concerned by the geostrategic political stuff?
I mean, it has been, I think all of us are puzzled in the way that you are, that the market has persistently priced in the opening of the Strait of Hormuz in short order. I mean, I think the thumbnail portrait of the situation is that if the strait stays closed for several more months towards the end of the summer, we're going to have a real economic problem. And the market has persistently said that is not going to happen.
Do you
I
believe?
wonder.
But do you believe? Because this is the unknown.
Hmm,
That if this
yes,
does continue, the market does
yes.
react, or does it shrug it off? I've got a sort of, I can't justify my
Eventually,
feeling.
absolutely. Absolutely, the answer to your question, Richard, is the market will have to react eventually. It is absolutely unambiguous. When global inventories of crude oil and refined products really reach a critical level, we are going to see economies slowing down. We're going to see US consumers making different choices about where they spend, where they drive, if they drive, and the market will respond. But we haven't gotten there yet. We're several months away, and the market has continued to believe that we won't get to that point.
And I'm grateful for you, Robert, as always. I'm so glad that you found time for us. Thank you very much, sir. Very kind.